Good morning, everybody. It's Brian. Hope you're doing well today. It is Tuesday, the 25th of August, and just here to do a really quick run through of what I'm looking at in the morning here for potential trade opportunities, and then key levels over on the futures side of things, and then I think we'll get going. Someone did ask me a question of the day about how long it takes to replace. I don't really know how it was. The basic question was, well, how quickly can I start, just basically quit my job and start trading? And it's such a loaded question. I was thinking about kind of how to present that here, because it's a loaded question that doesn't have a direct and easy answer to it. A lot of it comes down to opportunity costs. A lot of it comes down to the psychology of trading when you're forced at some level to perform, so on and so forth. I think it's something that a lot of people don't consider, which is something I always talk about. Folks just don't consider the psychological impacts of trading, right? There's the psychology intraday of what we're doing and all the little things in the back of our mind that are triggering certain decisions to be made. I know trigger is kind of a overused term today, but it's what it is. Certain things happen and it triggers things in our brain that has us move forward on a trading decision, good or bad, usually outside of our plan if we're trading emotionally. So there's the psychological aspect of it, and that's what really I think is the key between a good trader and a struggling trader, is the psychology, because at the end of the day we can all have the same system and same method. The one that succeeds with it is the one that has the psychological fortitude to stick with that plan and be consistent in their application, whereas the one that keeps letting emotion get in the way is one that keeps getting into situations where they draw down probably more than they should on their account because of holding on to trades and things like that. So anyway, the emotional side of it is key. And then there's a kind of a subset of that when you look at transitioning from a part-time trader to a full-time trader. There's also emotional triggers, and there's also financial triggers involved in it. So it's a really hard question to answer. I can just kind of give you my opinion on the back end of it, which is, you're there and you've got a job, and you've got, or even if you don't have a job, maybe you've got certain contractual agreements that are in place that you do for someone that brings in a certain income, right? So that income is coming in, and you're trading on the side, kind of part time. Your basic needs are met through whatever that initial source of income is. So when you're trading, you can just focus on the psychological pressures of sticking to your plan. When that income that meets your basic needs goes away, you become fully dependent on trading. That really amplifies all of those psychological triggers that might be there in place of that you're already fighting with or struggling with in order to get into a plan. So there becomes this whole other thing about needing to make a certain amount of money per day, per week, per month, whatever it might be, and that's a really tough situation to be in, because again, that just creates this whole kind of explosive level of emotion that I shouldn't say probably, doesn't need to be there in your trading. There's also the opportunity costs with it. When you think about it, like starting any new business, you need to have, in my opinion anyway, you need to have reserves to carry you through the time that business isn't making money. So again, you eliminate that basic, that stream of income that covers your basic needs, and all of a sudden, you might have to be drawing from your trading account in order to pay your regular monthly nut, whatever that might be, if you don't have some reserves set aside to carry you for 6 months, a year and a half, while you build your trading account to a point that puts you in a situation where you've got a history to say, okay, I could withdraw from this every X number of months, based on my historical performance, that would yada yada yada. So it's a loaded question, I guess is what it's coming down to. And I just I want to give you the most factual answer I can, which is it depends on every person. But really think through what you've got out there and how you're going to pay for things, and what the performance of your account is over a longer term. Not like, and I say this all the time, a trend isn't the last 10 trades, right? You need to have a good breadth of history behind you in order to make decisions and really understand what to expect from the market. So that comes down to not only back testing your trading method, but also forward testing your trading method for a while, so that you really truly know what to expect for not only account growth, but also drawdown periods. How much do you need to have put aside so that during those drawdown periods you can still trade and still cover your monthly nut and everything else before you can actually become a full-time trader. So certainly nothing wrong with keeping a side job, doing something that you enjoy that provides the basic necessities. If anything, if you're working and you're at a point where you feel like you'd like to transition out into full-time trading, but your job is kind of in the middle of the day where you can't trade and do that, one thing you could consider is changing, either see if your company would allow you to change shifts that would push your shift back to a later time or an earlier time, which would give you the opportunity to be able to focus in the market for certain times. So, maybe you could get a shift change that would allow you, let's say if you moved it later, you'd have that first part of the morning, if you're here in the US, to focus in the market. And then you have your shift later in the day, and you get the best of both worlds. Now you can trade full time, be focused on trading for a period, but you're not worried about covering that monthly expense, that those monthly needs that have to get paid, because that's still taken care of by your job. The other thing would be, take a lesser job that just covers those basic expenses and lets you work at a time that you can focus in the market. So there's some other ways to go about it rather than just going, I'm a trader, let's do it, boom, and then 3 months later you flame out because you've had to draw from your account to pay for expenses and so on and so forth. So anyway, just there's some things to consider there before you really think it through. And that's something, when I do coaching with students, we get into in kind of a one-on-one basis and really understand more about what their triggers are and what their expenses look like, and walk them through that questioning process so that they can find the answers for themselves around what makes the most sense for their specific thing. And this comes back to everything else I keep saying, which is you've got to have a trading plan that's unique to you. All trading plans kind of begin with an idea, and we talk about some different ideas here when we do our classes, but take those ideas and tweak them to make them your own. You don't have to follow a specific system by a specific person, because that specific system that works for that specific person, they created that around them. And just the little tweaks of how you manage things intraday that best fit your personality that are going to give you the best results. So anyway, I went down a rabbit hole there for the last 8 minutes. Let's just jump into what's going on in the marketplace today. Starting off with news. There is some news coming up today. It's not high impact, but it could potentially be impactful. I don't know how much it would be, though. I mean, these are the first bits of news coming out, which is the home price index reports. These first two right here, home price index reports. They're lagging, about 2 months back. So, they're measuring, well, obviously, home prices in some major cities, and if there's an increase or a decrease in value, and it's kind of seen as an indicator of, if home prices are dropping, maybe there's an excess of inventory, people aren't buying, which could be a sign that things are kind of turning in the economy. I think most major areas have seen a pretty good push in home sales. I know here in our area, especially, I know folks out in Vegas where I'm from, previously, so here in Texas, out in Vegas, I know they're just seeing crazy, amazing markets. How long will that continue? I don't know. I keep saying at some point the other shoe's got to drop around reality with what's going on economically in our country. But until that happens, we keep riding the wave. But anyway, these reports, these two are like 2 months back, so they'll probably be reporting on really good conditions. New home sales report is for last month. And manufacturing index, these are lagging about a month behind, but they're giving us an idea of what's happening a little closer to real time in the marketplace. So these might be a little more impactful around what's going on, but I don't really see a whole lot. There's nothing here in the news that would be like, hey, we've got a really major report coming up. We need to just jump out of the market and wait for that report and get back in. I don't see anything here that would be alarming. The big news this week, which we mentioned yesterday, the big news this week is over here on Thursday. This is where we'll really want to be careful, because Mr. Powell will be speaking right at the open of the new U.S. regular trading hours, and he'll be doing some Q&A. And the Q&A typically is what gets us, where he speaks on kind of his thoughts and opinions, and less of the canned politically. Well, I mean, it's always politically correct, but the canned speak. So that's where we could see a bigger impact is probably on Thursday over here. So anyway, all right. So getting into things. So we know leading off this morning, we don't have any major news to worry about. So that means we've got an open trading day. We don't have to duck out for anything. We can just see what's happening right off the bat and take trading opportunities if they pop up for us. So let's go over into the forex side of things, and then we'll come back into futures and then get on out of here. So in forex, looking at what's going on here, the yen has been a big mover over the course of the day. However, with that said, if we look at our yen cross pairs, those have already moved. Most of these, if you look at the pound yen, euro yen, even the CAD yen, they've moved at or over what their typical ranges are. So even though it's a good looking currency down here, not necessarily a great opportunity for us to jump into new trades, just because odds and probabilities. It's already moved or exceeded its typical range. What are the odds it's going to keep moving? So we probably want to back out of those. And if we look across the board over here, there's not a whole lot that really give us that opportunity. The U.S. versus the CAD is one. I mean, it's moved 40 pips for the day. Its average is about 80. So that could be an opportunity, the U.S. versus the CAD. Even the euro versus the USD, not typically one I really look at too much, but I mean, it's only moved 60 pips. Its average is around 90. Not as attractive, though, as the U.S. versus the CAD. So I would be watching over here for the USD versus CAD and see if we get a breakout that we could take advantage of over here. Right now, it would be saying we'd be selling the USD against the CAD. So what we'd want to see here is, this CAD continue to push above the midpoint, the USD continue to fall over here, and that would allow us to, sorry, I was looking at this. So what we'd want to see here is the CAD continue to push to strength, USD continue to push to weakness over here, and that would allow us to get into a trade. Pound versus the USD would be an alternate to that. It's moved 85 pips, averages about 110. So that's also got the potential opportunity to move for us and get us into that quick profit that we'd be looking for on a breakout. But so US versus the CAD, looking at, we can see that our volume detail seems to be favoring continued selling, and we've also got the right number of range still left now. We've still got about 40 pips of range left here. So could that potentially move that quick 20 pips to get us into a profitable position? Yeah, I mean, it's got a good opportunity to do that. Will it do it? No one knows, but it's got a good opportunity to do that. Pound USD, same thing over here. Looking for pound continuing to strengthen against the USD. We've got the volume detail that's favoring buying coming into this new session, and we've got range left over here. So both of these are looking like good potential pairing opportunities where we can look at a strong currency versus a weak currency, and then wait for that breakout on some momentum to occur, and then get into that tradable opportunity. So either pound USD or US versus the CAD would be the two that look the best to me coming into this new session here. So we'll see how those go, but breakouts on either of those. Moving on over here to the futures side of things, cracking up to exciting new heights on the S&P. So the ES over here, the S&P, continued to have that long bias. So we mentioned yesterday the 4-hour bias continues to be long. 30-minute bias is long as well. So that would tell us to continue looking for long trading opportunities. Didn't have an opportunity yesterday, during the trading hours that we're in, to have a new trade to put on. It did pull back a little bit, but never gave us that lower high, lower low during the time that we're watching the market here, with a break on it. So unfortunately, we're still waiting to see if we get a tradable opportunity. What I'd like to see here would be a pullback. We'd like to see it pull back, to this. On the 30-minute here, we could be watching this 34.25, 34.20 area as a pullback. I'm still surprised that yesterday we didn't on the open pull back down to 3,400 or even 33.95, and then push. So I would expect that we'd see a pullback at some point this week on it. I don't know how deep it would be, but it could happen on Thursday. We'll see. I don't know. No one has a crystal ball, but certainly wouldn't want to by the very, very top of this. I'd want to see it pull back to get us in at a better price. And that pullback, again, like I said, could look like a pullback. Over here on the 30-minute, we could be watching this 34, it's kind of the same, 34.25, 34.20 area over here. Maybe even a pullback to retest the close, yesterday's close, today's open, over here at 34.26. But either way, look for a pullback to a key level, and then we want to trade long off of that. The bias is still long on this. Crude, we've flipped over, got a long bias on crude as well. So here coming into the new session, we've got crude, that 4-hour bias is long, 30-minute bias is long as well. So with this one as well, we'd be looking for pullbacks. You've got a key level that's been tested and retested over here at 42.60. So we could look for a pullback to 42.60. If it does pull back down below 42.80, 42.80 would be the breakout point from here. Higher than that, it really has struggled around 4,300. So, if you're looking for momentum, a really good push through 4,300, if you're looking higher than this, could be a good breakout trade potential as well. But just like with the S&P, I'd rather see it float back a little bit, at least down to this 42.60, where it's been testing and retesting quite a bit. That would be the key area for us to watch down here. Even if it broke down a little bit and didn't quite get to 42.60, let's say it breaks down and is kind of just struggling around here, you could push your buy stop up here to 42.80 and see if it breaks through up there to push long off of that. But either way, the bias is long on crude. Gold, I hate to say it, but man, gold is flipped. It's got that short bias. So both on the 4-hour and here on the 30-minute, we're looking to go short on gold. So what that would look like for us would be a pullback to a key level here, 1935, 1940 is probably the better level, and then look to short it off of that for gold. So that's what we've got coming into the new session. So still got an hour and a half, hour and 15 minutes before the regular trading hours begin. Anything can happen up to that point, but once we get into there, we'll watch for the right opportunities and then take action. Of course, the one thing that we have been taking action on and reviewing is that trading plan that's a very, very simple one, where we simply look for, if we're in an upward bias, we look for price to make lower highs and lower lows, and then play a breakout of that lower high. That's a great way to go, but look at it in a period of time, look at it in a certain window. And then, if we're short, we'd be looking to make higher lows and higher highs, and then short off a breakout of that previously closed candle with the with the the lower high. So or lower low, I mean, or high higher low. So anyway, if we have one of those trades, we'll post that up here and talk about it. We've still got probably another week before I lock down the indicator. So if you guys are wanting access to that, just shoot me a message. I need your TradingView account, username, and I can provide you access into that application. So just shoot me a message, Facebook or email, either one, and I'll get you sorted out. All right, so that's it for now. I'll let you guys go and get on with your day, and I'll get on with mine. Have a great one. Bye.